Hi, my name is Melissa Bradley, and I am so excited to talk to you about accounting and financial essentials. Now, most people go, "Ugh, we're going to talk about numbers. I hate numbers." But you know what? Two plus two is always four. When I went to college, I knew I was going to be a finance major because two plus two is always four, three plus three is always six, six plus six is always 12. However, American history, European history, all those things change. They're subject to revisions by the professor. So I like to stick with things that aren't going to change. And so I love talking about accounting and finance. Now, we're going to cover some basics and go all the way up to more complicated things. But let's level set why it's even important to talk about accounting and finance. First is because accounting and finance, money, are extremely important to the type of business that you want to grow. Sometimes you may need a capital investment, sometimes you don't. But it's important to know what kind of company do you want to build. It doesn't really matter what kind of company it is as long as you're comfortable and happy with it. But it is important to understand the different types of companies so that you know the different amounts of money that you need. Because if you need outside capital, then you really better hone in on your accounting and finance skills because you can't get somebody else's money if you can't manage your own. So let's think about the types of companies. There's lifestyle, growth, and scale. Now, they're not all the same. A lifestyle business is a business that gives you a really nice lifestyle. You're actually making more money than you're spending. It could be a small retail store, it could be a consulting business. It doesn't really matter what it is, but it's something that hopefully you enjoy and is allowing you to live a really good life. Then there's a growth company. You're probably working a little harder. You hopefully have some team members. There's a lot to be done, but you have a real goal to create a business that is growing probably 5 to 20% year over year. You may start with one shop and you go to two. You have a supply chain relationship with a really large company, but you see the opportunity to continue to grow the business because of what you're doing in terms of your product or service, or because you have an amazing customer mix. And then there's a scalable business. These are the ones that we hear about all the time. These are a little harder to get to, but if you have the right amount of capital, then you can get there a whole lot faster. These are companies that are growing hundreds of percent year over year, massive market penetration and customer acquisition. And it's an amazing business to be in. Now, again, it doesn't really matter whether you're a lifestyle business or a scalable business. You have to be happy because it's your time and your money. However, the farther up the food chain you go with the type of business, then you actually need other people's money. It could be friends and family, it could be angels, it could be venture capitalists, it could even be private equity people. But the bottom line is when you determine what kind of business you want, then you are able to understand what type of investment capital do you need over time. And it could be from zero to million. And again, it doesn't matter. What matters is you're comfortable, you're happy, and you're enjoying what you're doing, and you're really clear on the differences between those businesses. But again, the reason why you want to know what kind of business you're in is because it helps you then determine what is your path in the investment community. Lots of people are running toward venture capital. Some people don't ever want to ask someone for a dime, and that's okay. But the most important thing in running a business is being able to manage money, whether it's yours or somebody else's. And so I want to make sure that we cover some of the basics that oftentimes get overlooked or we forget about, or we haven't really built in a routine, and it makes an impact, particularly if you're going to go ask for somebody else's money. So let's start with some accounting basics. When you start a business, it's you. It's you and only you. And so oftentimes we do things that are easy and expedient, but we also oftentimes do things that we shouldn't be doing. If you start a business from day one, you should have a separate bank account. You do not want to commingle your funds. Not only is it not good accounting practice, depending on how you're using the money, it could be illegal. But the biggest reason why I tell entrepreneurs not to commingle their funds and go buy that office paper with your personal credit card or buy that business printer with cash out of your pocket is because all those things you are buying are assets, contributions, and most importantly, cost of running the business. And if you don't appropriately account for those, literally and figuratively, then you've underestimated the cost of running the business. So it's extremely important that you don't commingle your funds. It's extremely important that you have separate bank accounts because whether you're running a lifestyle business or a growth business, you want to be able to look at your bank account and understand, do I have enough cash to survive? And how am I generating revenue and sales that ultimately creates value for my business and for myself? A basic mistake, and some of the entrepreneurs say, yeah, I got the same account, but I'm working on it. Be disciplined. Do it now, because otherwise you could potentially be underestimating the cost of running your business, which means you may actually run out of money sooner than you ever imagined. And you're going to look up and go, what happened? And you realize that all those things you bought, or all those things you were paying for, like taxi cabs or supplier stuff, you realize you've been paying with your personal card, and now you don't have any personal money and you don't have any business money. And you really want to make sure that you keep the books separate, because the IRS is paying attention. We also know that as an entrepreneur, we oftentimes don't get paid in the beginning. And we say, oh, we'll wait. And then when it comes down to get an investment and you say, well, what are you worth or what's your salary? You go, well, I think I should have $150,000 a year. But let me tell you, I haven't been paid for 3 years. So therefore, I want, an investor's going to go, you're crazy. I'm not paying you for all that. And not necessarily because they believe you don't deserve it, but because there's nowhere in the financial statements, which is the most accurate depiction of the value and profitability of your business, nowhere in there is there evidence that oftentimes an entrepreneur wanted to get paid. If you are producing bank statements during your first few months and you're not getting paid, but you're not accounting for it, then you are signaling to the world, me getting paid is not important. Your financial statements, which we're going to dig into in a little bit, are a reflection of your values and your priorities as an entrepreneur and as a business. And therefore, you've got to prioritize yourself. And too often we think, well, if I can't afford it, I shouldn't document it. If I can't afford it, I shouldn't account for it. Wrong answer. Even if you can't afford it, you should account for it, because it's a cost to the business. And if I'm an investor and I have not seen that cost for 3 years, and all of a sudden you want to tell me I'm in arrears for 3 years, we can debate back and forth, but you have no evidence that this was a cost to the business. So I recommend that when you can get there, get payroll, because then you can outsource the activity and somebody else takes care of it. And trust me, it's worth the several dollars a month for somebody else to do it. But in the beginning stages, if you can't afford it, you still want to have a line item that says owner's draw or CEO draw. And a draw just means that you're at a point in the business where you can't guarantee that you can get paid consistently, but you at least recognize that there's something that you need to survive on. And then payroll is when you're actually ready to institute salaries and job descriptions and those kind of things. And regardless of how you choose to do it, there needs to be a line item that talks about money being paid to people. So I always recommend to folks that when you're just starting this business, just pick a draw, $2,500 a month, $5,000 a month, whatever the case may be. And whether or not you can pay it, it becomes part of your financial statement. And then over time, it not only becomes a cost item, but it becomes a liability, because then it accrues over time. It aggregates and accumulates over time, and it's there on the books. And then when you go get an investment, the investor can see, oh, I see there's some back salaries due. Okay, great. Because you've signaled that what's on your financial statements is important to you. And you need to do that as soon as you can, even if you can't afford to pay yourself, because you're creating an element of discipline, you're signaling, you're putting value on yourself and anyone else who's going to join your team. You also want to be careful that you're not doing personal expense reimbursement and then trying to say there's an additional salary. One, if you don't commingle your funds, there should be no need for a personal expense reimbursement, because you'll have a personal account and a business account. But if in the end, you need to be able to reconcile the books, because now you're like, oh shoot, I better go do this, then you want to make sure that you've documented it. Not, well, I bought some paper, I think it was $8, I'll take that. Because 8 times 8 times 8 times 12 months all adds up. You want to have a policy. I know it sounds crazy because you're reimbursing yourself. But again, accounting and finance is about a discipline. It's about a discipline that allows people to have confidence in you and also says exactly how you're running the business and how you value money coming in and money coming out. So if you go buy a box of paper or a box of envelopes or a printer, then you want to write that down. You want to log it and you want to fill out a form that says you were reimbursed. And you don't want to put it on your books as a personal expense reimbursement, and you don't want to throw it in owner's drawer. You want to separate it and just write it as supplies or equipment. And then when it comes to things like mileage reimbursement and those kind of things, you got to get into the discipline of doing them. And it's pretty easy. Go to the IRS website and figure out what it is. Don't say, well, I think it's $1 a mile, because it's not, but really figure out. Same thing with hotels. Stay within the standards of what is governed. And if you go a couple dollars here or there, it's not the end of the world. But from an investment perspective, even if I'm a banker and you're going to need a loan or a line of credit one day, your finances and your accounting discipline and procedures signal to me how well you can run a business. It signals to me how you value how your money is spent. It signals to me how you value your time in the business. And to be honest, it's the only way I can truly count what is the value of your business in dollars and cents, because that's the only record and documentation I have. And so when people get really excited about financial statements, it's important to understand it's not just because they love numbers, but they recognize it's such a core tool that can drive their business, but also helps build confidence from others in their business. Imagine if you set up a supplier relationship or a partnership, they're going to want to know you're solvent. So you'll need to have these financial statements that are accurately compiled with information and are separated from your personal account so you can actually show how well your business is doing. Now, you're overwhelmed already, and we're just getting started. So it's really important that you get a good accounting system. I don't really care what system it is, as long as it works for you. Get a system where on your phone you can take pictures of receipts. Get a system that sends you notifications that you need to pay something. I don't care what you use. People tend to use QuickBooks or other systems. It doesn't matter. But make sure that you have one, because it's all about getting into a discipline and having a consistent system that signals to people the accurate depiction of the cost and value of your business, and also generates faith and trust because there's a discipline around how things are calculated, when they're calculated, etc. So accounting system is extremely important. Now, you can obviously consult with an accountant in the beginning if none of this stuff makes sense to you, to at least get it set up. They can set up your chart of accounts. And your chart of accounts are literally just a list of all the types of accounts and bills you have to pay: supplies, salaries, rent, transportation, travel, consulting, you name it. Because you may not be able to think of them all, or you may not want to have to think of them all. You want to set up time with an accountant because they can do that for you. And you're probably saying, oh my God, I can't hire an accountant. You don't have to hire one for perpetuity, but at least engage one, even if it's a pro bono opportunity, to help you get that set up. Because how you start is how you finish. You start sloppy, you end sloppy. You start discipline, you end discipline. And so there's a way to engage experts in your business as needed to help you create the systems that hopefully ultimately you can run yourself. I think it's important to get an accountant to help you, just so that you're on the right track, unless you really understand this stuff, because you don't want to make a mistake and miscount something, and then you've got to go back and re-reconcile your books, and that is expensive. But I would also say that it's important that this is not an activity that is completely 150% delegated to an accountant, because you, as the CEO, as the entrepreneur, as the founder, you've got to understand your money. How many times have we heard of professional athletes and entertainers who are all of a sudden broke because they outsource their accounting activities and their legal activities? And outsourcing is not bad, but it doesn't mean that you don't have to pay attention. Outsourcing doesn't mean that you don't have to understand, which is why I want to have this conversation with you today. Because too often we think, oh, check the box, I got an accountant. Check the box, I got a lawyer. Check the box, I got a tax person. But if you don't understand how those things operate, you don't know what that person is really doing with your systems or your money. And so this demonstrates that you actually have the capacity and the ability to run the business, and it generates faith and trust, not only by your employees and your partners, but by potential investors. Expenses are no different, because this is how you know what you get to keep. And so you want to make sure that you have a process to keep receipts. Get an app on your phone. There's an app for everything, so that you know where you spent money and how you spent money. And when you buy something, write on the receipt. I know when I get business cards, I write down who it is, and so I can remember. Same thing with the receipt, and take a picture soon, because I've learned the hard way. If they don't come out my pocket and I wash something, I no longer know what I spent and what it was for. So make sure that you have a way to keep receipts, because they're going to be needed at the end of the year when it's time for you to reconcile, and they're certainly going to be needed to be able to do your tax returns. Get an accountant, get help, but really think about your expense categories, because you may think of only the ones that you've actually spent money on, but in your line of business, and particularly as your business grows, there's probably going to be so many more. So get help in setting up your expense categories. And review your vendor contracts. If you have contracts with people, make sure you know if there's ways that you could be saving money. That if you prepay something, can you save money? Now you may say, I can barely pay myself. How am I going to prepay something? But the reality is that sometimes that difference that you're able to save over time by prepaying could help you actually pay another bill. And all of this is accounting and cash management, which, let's be clear, people do every day, all day for a job. But you as the entrepreneur, particularly when you're just getting started early on, you may have somebody that does it full time. But this is all about getting it set up correctly and having a discipline and creating enough time to be able to do these things, because this is where if you invest the time, you could actually possibly save some money. When it comes to expenses, again, payroll. Once you get to the point that you can afford to pay someone, you don't want to screw that up. While I know you know how to write a check to somebody, you may even be able to log on and do ACH, get a payroll company. So you're taking out the right taxes. So you're taking out for workers' compensation. You're taking out for unemployment insurance. Get an expert to do that. The dollars it's going to take a month is going to save you, particularly if you have more people than you know you can manage well when it comes to payroll. You don't want to mess that up, because it'll come back to bite you in the end. And also you want to think about the opportunity cost of time. Is it worth paying somebody 25, 50, 150, whatever it is, an hour to do it for you, when it would cost you so much more because you're not running the business? A big topic now is making sure that when you do have people working for you, they're classified correctly. Talk to an attorney. 1099 employees are easy, they're exciting, they seem cheaper, but they may not be. And so you want to make sure that while, yes, it's very scary and daunting to have employees at the beginning, because you're like, oh my God, somebody's counting on me to pay them. Well, all employees are counting on you to pay them. And what you don't want to do is you don't want to have a 1099 employee that really should have been classified as a full-time worker, because then you have back taxes and back insurances and back everything that you might not be able to afford moving forward, or just is totally going to freak you out and throw you off your game. So there's ways to go on to irs.gov, but talk to a lawyer, and then manage employee time. The last thing you want to do is be paying people to do absolutely nothing, or to pay them to do the wrong things. And so that's an expense. How employees spend their time is an expense. So thinking about how you run meetings, what is the culture of the company, how you manage, how you track productivity. All those things are important, because if you don't stay on top of them, then things can go rogue, and those things just get really expensive for you. And so if you think about just what we've covered, nothing should have surprised you. It's pretty basic accounting. But that accounting is extremely important, because it manifests itself in financial statements, which I know scares the living daylights out of most people. But we just went through things like don't commingle your funds, capture your receipts, write down your expenses, negotiate contracts, all things that translate to what is the value and the growth potential and the profitability of your business. Accounting are the activities and the discipline that you create for your business. The financial statements are the way that you demonstrate and articulate the value and profitability and sustainability of your business to the world, to your employees, to your partners, to your suppliers, and to any potential investors. Exciting stuff.